Hey guys, Max here, and this is your daily market update for yesterday, the 2nd of March. We saw a decent rally in American equities as we heard a little bit from the Fed. We saw the Russian economy fall further as sanctions continue to pile up and a couple other things, so let's get right into it. So the S&P 500 rose by 1.9% yesterday, and the Nasdaq and the Dow Jones moved in that same direction, going up by 1.6 and 1.7% each. European markets followed as well, with the FTSE 100 and the Stoxx 600 also seeing gains of above 1.5%. As I said, this is really based on the monetary environment, inflation fears, and the fears of what central banks are going to do to try and fight inflation, and we will go into more detail on this shortly. In general though, market sentiment got better, investors got a bit more confident in the ability of companies to continue to grow, and despite lots of risks of high inflation, the fear from investors isn't about the inflation itself, but government and central bank responses to inflation. Commodity markets as well rose broadly all over the world based on a few things. The first is that economies, by and large, with the exception of Russia and China, really are doing well, and their imports are expected to continue to grow, and inflation isn't actually going to hamper that, it's going to make it worse. We then have the concerns about supply-side shortages on that commodity side, mostly with energy, oil and gas in particular, with the war in Ukraine and all the sanctions hitting Russia, but also with foodstuffs coming out of Ukraine and Russia, huge amounts of farmland that probably isn't going to be too productive this year as war rages on. Oil prices have been spiking recently. A couple of months ago, they were sitting at around $70 a barrel, and then they started to rise as fears of a conflict in Ukraine emerged as Russia started piling up troops on that border, and no one really knew how strong Western sanctions would be should it come to that. It turned out though that they would come in far harder and stronger than really anyone, including Putin, expected, and that means oil is going to be in low supply, in Europe in particular, but oil is a global market, so everything will be impacted to some extent. Yesterday, we saw another major oil spike, and Brent crude oil, the standard in Europe, is up another 3%, now sitting just below $117 a barrel. WTI crude is sitting a bit lower at $111 a barrel, up 7% from the day before. Now, these levels are seriously insane, and they are going to continue to cause huge inflation across the board. Almost everything will be impacted. Now, for natural gas in Europe, we see the same story really, but places in the US are far less impacted by the supply shortages in Europe. Natural gas is a bit of a smaller and less interconnected market. Just over a week ago, before the war started though, natural gas prices were sitting at around 70 euros per megawatt hour. Right now, that number is 160, more than 100% higher. This is, again, fully expected. Gas flows from Russia have never been lower, and it's still relatively cold in Europe, so demand is quite high. Sanctions mean that Russia is reluctant to send gas over, but they do need that export to keep their economy functioning, and Europe is reluctant to buy gas from Russia as well. Liquid natural gas is being shipped over to Europe, but this has been happening for years now, and while the process is being ramped up and accelerated, it's still not enough to make up the shortfall. Another option is basically to restart fracking processes across Europe, but there's loads of opposition against this, and it's not a clear-cut issue in the eyes of the public, and it will take time for production to ramp up, so who knows if this will actually ease any of the issues. To be honest, I think Western reluctance to fracking has been a little bit of a double-edged sword. It's been a bit irrational, and it's one of the reasons we are so reliant on Russian gas today, and it's led to the situation that we're in right now, so I think we should just get on with it and accept that it isn't perfect, but there isn't much of an alternative right now. Now, currencies for the most part were stable, apart from the ruble, which fell another 20% against the dollar yesterday. Each ruble is now not even worth 1 US cent. It has absolutely tanked in value in international markets, and if you're actually trying to convert rubles to something else, you're probably looking at a 50% loss compared to what value those rubles held a week ago. Really rough stuff. The Russian economy is still getting hammered, as you would expect as well. Sanctions are still coming out, and Russian oligarchs are starting to lose their assets, seeing them seized by Western governments. Here, there is just too much news to mention everything, but some of the important updates are that loads of sports federations and events have blacklisted Russian athletes, and they won't be playing in Russia anymore either. Formula 1 cancelled the Russian Grand Prix, and then they cancelled all future Grand Prix in Russia as well, destroying their contract. Russian athletes are banned from the 2022 Winter Paralympic Games, a huge turnaround for the Olympic Committee. The French government seized a huge mega yacht from a Russian oligarch who is Rosneft's boss, former KGB agent and deputy prime minister. He's one very well-connected Russian who's just lost his very favoured big boat. Another yacht owned by another billionaire oligarch has been seized in Germany. This one is worth about $800 million. Individual businesses are cutting their ties with Russia. Volkswagen, one of the biggest car manufacturers in the world, is halting all operations in Russia, no longer building cars or selling them or servicing them either. IKEA is halting operations in Belarus and Russia. Apple stores are not opening in the country. There are countless companies who have decided to join the fray really and halt operations in Russia as a result of the invasion. The three largest Russian companies trading outside of Russia are Gazprom, Lukoil and Sberbank, and all three of them have seen their share prices fall to basically zero over the last couple of days. Investments in those companies are quite literally worthless now. It's really hard to explain just how influential some of these actions are without being an expert in each of these industries, but just to give some perspective, I found this thread on Twitter, which will be linked to down below in the description, which explains just how devastated the Russian aviation industry will be from these sanctions, and it does a really good job just explaining that process. Very few aircraft are actually owned by airlines, and instead most are owned by lesser companies, most of which are Irish. Under the sanctions regime, the view in the legal community is that those leases have to be terminated, otherwise Irish companies will be criminally liable. More importantly, Russian operators are unable to effect insurances. Without those, no national aviation authority will allow access to its airspace. This would in effect mean the end of Russian operators flying internationally. Furthermore, despite the presence of some Sukhois, Ilyushins and Antonovs, the bulk of aircraft operated in Russia is still Boeing and Airbus. Those use CFM, GE and Rolls-Royce engines. All these manufacturers have cut off access to repair manuals without which the aircraft and engines cannot be serviced. They have also issued a global ban on servicing in other countries so that Russian aircraft cannot be flown abroad for maintenance. They have also stopped the supply of spare parts. From talking to our clients, I understand most airlines keep about 2 or 3 weeks worth of spare supplies. What does this mean? Russia will be in effect cut off from international travel, perhaps with the notable exception of China. It will be more isolated than the USSR, and even domestic journeys will be severely limited. Sanctions, if drafted well, do work. It's also worth noting that even if someone very clever managed to find a way, and I am sure there are plenty of fellow lawyers in law offices all over Russia thinking very hard about this, there is literally no way for Russian entities to make international payments. They therefore won't even be able to refuel or pay for airport charges. Even China would have to accept either a cash payment from the yuan held by the Russian central bank or some form of extended credit, both of which are very unlikely. All credit, of course, there goes to Jan. Link for his Twitter is down below. Russian economist Maxim Mironov said this of the Russian economy: "My scientific conclusion is that the Russian economy is double f***ed because most Russians don't know what's coming." Basically, yeah, the sanctions are going to work. Now, there has been a move back away from risk-off assets, with bond yields advancing by 10 to 20 basis points overnight and gold prices falling almost 1% yesterday, now sitting at $1,930 an ounce. This is in line with the rise in equities. So why are we seeing it? Well, the chances of a 50 basis point rate hike, which was the big fear for markets a month or so ago, has decreased dramatically, and it seems very clear that a 25 basis point rate hike is what we're going to see, which is a fair bit easier for markets to stomach. This seems to be a little bit influenced by potential fears around the Ukraine war. The Fed doesn't want to spook markets any further, and it's choosing to take yet another risk regarding inflation. With commodity and energy prices going where they are, inflation is going to continue to skyrocket. It's not stopping. I've been saying this for months, and for months the Fed has ignored it, and they're continuing to ignore it today. That is it for the day. If you enjoyed this video, then leave a like and a comment to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like insight into my portfolio and buy and sell alerts for all my own investments. There's a link in the description to masterworks.io, a site that allows you to buy fractional shares of art from world-famous artists like Banksy, which can be a great way to diversify your portfolio with non-market correlated assets. It's completely free to sign up. You don't have to buy anything. You don't have to hand over any card information. So if that sounds interesting, then make sure to check it out. There's also a link in the description to BlockFi, which will give you up to $250 in free Bitcoin when you use it. You can also get 9% interest on stablecoins like USDC, which is a far higher rate than you get from any savings account these days. Just make sure not to use Tether. Thank you all for the support. Thanks for watching. Stay stoic. Until next time.